Hello everyone. If you want to go to my free course, type henry-ward.co.uk into Google, then go to Henry Ward Trading, and then this here is my free course. Click on Start Today. If you want to go on to the webinars that I do every Sunday and every Wednesday, click on Trading Academy and then click on Start Today. So this is the Trading Academy. This is the full training, the webinars, direct access to me, everything that you want. Hello everyone. Hope your markets have been kind to you. So as we can see on sort of the Nasdaq, we've had a bounce off this 1045, so that 10,450 area. So we've come down, touched that there, and we've bounced back up. So we've had a bounce or rejection off that level of 9%, nearly 10%. Now, I'd sort of expected to go back up to there, which is about a 12% bounce. And then that for me is the area where we will get some sort of resistance. We will double top there. And that should be the area where I would expect that to hit its head. Now, the question is there more sellers in the market and push it down? Or will the buyers take over at that stage? And that's the $64 million question we have. We've made a lower low here, and then we sort of took off again up to this point. And we had on this particular movement from that low, we had 25% movements. Now, a 25% movements here would go back up to there. Okay, so we would have that lower high, would get up to in around sort of this sort of level there. The 12,730 area. But again, we can't guarantee that. For me, that's the first bit of resistance right there. That's the area, double top. Are we at a point where we're looking to short the market at that point, or are we looking for the market to bounce to the upside? There wasn't a whole lot to tell us that was the area was going to bounce. There's sort of a small bottom there, but nothing jumping out at us majorly. S&P, absolutely very, very similar. And again, that level there. Now, this one is at a double top. So if we look at this is already at a double top. Okay. Now, the question is that which is the stronger? Is the S&P 500 stronger, or is the Nasdaq stronger? And it depends on which we expect to be a little bit stronger. If this is the case, then we expect this to drop. We'd expect to hit a double top and now move on down. If we think the Nasdaq is stronger and tech is stronger, we'd expect it to come up to here and then drop. So we have to make our decision. Which of these two do we think is going to hit the ceiling and then drop? And if we are looking to short this, there's a couple of different ways. Now, for me, the safest one of all is entry underneath that bar. So underneath the last green bar, stop loss up there, slightly above it, above this previous high. Now, the chance of you getting triggered in is slim. Why? Because this bar is here. But if the market comes into free fall, then you're in the market. And that would be a 2-to-1 before I got to this low down here. Now, I might even be looking to take profit at that particular point, which is 1.3-to-1. But I'd definitely be amending my trade at that particular point. And then potentially leave the rest to run. I don't think I'll be letting this run straight down there. I'll be looking to take some sort of profit there. Now, the other scenario here is some sort of a limit order. Now, it's hard to put a limit order on this already because it's sitting right there on that level. So if we drop down to the 4-hour, we can see we already have the sort of 1, 2, 3, 4 bars there sitting on this ceiling. Now, the other way of doing this is that unfortunately there's no limit order on it. So we'd have to take the bottom of one of those bars there. Our stop loss still goes in the same area, but the risk to reward is much better. Why? Because there's a much higher probability of getting triggered in and triggered out. Okay, and that's one of the negative things about using such a small stop loss, that there is a high probability you get triggered in, triggered out on the 4-hour. But again, you have to make a decision. Do you think that the S&P is going to turn around at this particular level? Or do you think it's going to continue going up and the Nasdaq is going to turn when it hits that? Or do you think we now actually have a bullish momentum? Phase 1, 2, 1, 2, 1, and we're expecting this phase 2. If you expect this to be just a phase 2, would only ever look as a one-to-one trade. I'd be looking to get out about here. So if I'm looking at this as a one-to-one trade, I'll be looking to get out there at the body of this candle. So if you can see that there, the body of the candle's here, I'll be looking to get out, and that is a 1.26 to 1. So that would be the idea of that trade. And then the Dow. So the Dow is much more bullish than the S&P and the Nasdaq. So we remove that. Remove this as well. And remove. Okay, so we have a lot more bullish momentum here. If we're looking at the likes of this, we have a really small level here. Is that level strong enough to hold that there? Probably not. Probably not. But we do have a very small level there. So 1, 2, 3. So 3 touches there. Okay, and again, if we're looking to short this, entry underneath this bar, stop loss goes above it. Now, I'm putting my stop loss up here. Why? Because we have the high up here. Look at this high. I have my stop loss above that high. If I'm looking to short it. If you are happy with this level, if you're happy with this area, entry there, stop loss above it, and we're looking for the market to drop. I'd say profit would definitely be inside this area. So that'd be 1.84 to 1. So that would be the idea on that, looking for that to turn, if we're looking for that. Moving on to a trade that we actually talked about and looked at, and some of you guys would have taken, is oil. Is it oil or is it gas? It's natural gas. Okay, cool. So we talked about this trade here. We talked about this particular bar, and we talked about putting a limit order right there. Now, anyone who took this trade, we can see that there's the floor, and look at his bounce there again. So we have 1, 2, 3, 4, 5. So we have 5 touches on that floor there. 1, 2, 3, 4, 5 is touching that floor. Brilliant. So that's what we're looking for. We're looking for it to touch the floor. We're looking for it to hit the bottom and pop back up. So we talked about putting a limit order right there. We talked about our stop loss below this black line. So how to put a stop loss below this black line, because there's a couple of touches on this black line. Now, anyone that took that trade at the moment, you are 2 to 1 up. So well done, anyone that took that trade. Now, you may or may not be triggered in. Depending on your broker, you may or may not be triggered in. You may or may not be triggered in this, depending on where you put your broker, where your broker spread, and the buy and the sell. So it depends on each individual broker whether you were in this trade or not. So this is a reversal trade. It's come down to a floor. It's come down to this area. We expected to hit the same area. Our entry slightly above it, and now it has turned. And that's exactly what we're looking to do. That's exactly what we're wanting the market to do. And that's exactly what's after happening there. Came down, touched it, and moved up. I'm going to drop down to the 4 hour. We can see it touched once, came down, touched again, and then sort of popped to the upside. Now, some people would have taken this, but not everyone will. Not everyone will have, but some people will have. And we're looking for it to go back to there. So just remove. Now, if I look at the daily chart, let's see, will it go the whole way back to there? Now, this is a reversal pattern. Okay, it is a reversal pattern, and there's a lot of ways to work out whether it will go the whole way back there. Now, and again, we never 100% know whether it will or not. But one of the ways of checking whether it's going to go back is using a Fibonacci. Okay, so if we go to Fibonacci, and there's the phase 1 and the phase 2. So Fibonacci, we use it to predict how big the phase 2 is. Okay, so that's the idea. So we're checking from 0, from the high to the low, and we're looking to see how far we expect it to go back. Now, the first retracement level is there. Okay, and that's exactly where our take profit is that orange line. So that's the first Fibonacci level right there, the 38.2. That's the first one, and then the 50%. Okay, so they're the probably two ideal ones that I expect to go back. Now, remember, 50% is not an actual Fibonacci level, but 50% is a human level that we know. Well, that's half of what the overall movement was. So all we're doing is if this is 100% of the movements, we're measuring what percentage of that overall movement is this going to go back? Is it going to go back here 38%? Is it going to go back 50% or the 61.8? Which of those three do we expect it to go back to? And if we use a Fibonacci, we're expecting it to get back into that level. And that's all Fibonacci is. We're measuring phase 1 and trying to predict how far that phase 2 is going to go. Now, and again, it's only a prediction. We're only guessing. We're only taking an educated guess. If I remove the Fibonacci here, delete, get another one. Look at this phase 1 here. Now, this phase 2 went up between the 236 and the 38.2. So it didn't quite hit the 38.2. So again, it wouldn't have hit profit here if it's following that, same one. Okay. If I get this one here and I move it up to this one, look, it bounced up to 61.8. Look, 61.8. So yes, these cycles are slightly different. So what we're looking for is to get back to the bare minimum is the 38.2. So that's where we're expecting to get back to the bare minimum. Remove. Okay, so that works out where we're looking for this to come back to. If we look at likes of the Aussie 200, we took this trade here and it looks like we'd be stopped out. Let me go down to the 4 hour. Have a look. It looks like we would have been stopped out. Okay, so depending on your trade management on this particular one, if you had a 3-to-1, you would have been stopped out. If you had this trade running, it then went down to 0.86. So it didn't quite get to a 1-to-1, and then it stopped out. And the reason we're taking this trade here is we had a triple top or a double top, well, a triple 1 to triple top, came down and then turn around and stopped us out. So the market didn't agree with us. So I'm going to remove that. So again, now it's hit that ceiling again, identical ceiling. It's hit that. We now have a 1-2 with a triple top. Question is that trade available here now? Is that valid? Short position. Now I understand that this bar is not finished. So just assume that that bar is finished. There's the high. There's a 3-to-1 now. We have 1, 2, 3, and this is the 4th touch on that level. Is that now a valid trade? Is it the best trade in the world? Absolutely not. Why? Because the cyclicity, the highs are getting, the lows are getting higher. Look, there's a low, higher low, higher low. So we have sort of a triangle shape going on here, look. But it keeps bouncing off that ceiling. Hit the ceiling down, hit the ceiling down, hit the ceiling down, hit the ceiling down. So we're going to get one of two plays of this. It's going to break out to the downside, or it's going to break the ceiling and to the upside. Now, the overall consensus is it's going down. So you would expect it to break to the downside. So the overall consensus is down, so you'd expect it to break to the downside. But it's not guaranteed, but probability is weighted in the direction of the downward. We're also in that area of the trend line. It's not the best trend line in the world, but it's still there. So we do have consensus to the downside on this. Let's have a look at gold and silver. I know we had a couple of winners on gold. So if we look at silver, it didn't come up and hit this shoulder. So this is the head, is the left shoulder. It didn't come up and hit this right shoulder for us. But again, we seem to have sort of a little floor there as well that it keeps bouncing off of. So it seems to be pinging between these two areas at the moment. So is it something that we should be trading? Not really. Not really. It's no. But again, we have a phase 1, phase 2, and this looks like it's the beginning of the phase 1 to the downside again. But again, before we look at silver and we say, yes, this is exactly where we wanted to go, we have to look at the dollar index, and we have to have a look at gold as well. Okay, so we looked at this trade here. Again, a limit order. If I go back, was a limit order, we take that as a buy stop? No, we took that as a buy stop on that low test bar. So well done, anyone that took that. We took it. Now I put a 3-to-1 on that there, just to see how far it would go. But again, I'd never actually trade that as a 3-to-1. We'd never actually trade that as a 3-to-1. We'd never trade it past this purple line here, because it just makes no sense for us to trade against that. Now, the question is now, would I have had my take profit that low? Would I have had it at a 2 point, it looks like a 2.3-to-1? Would I have had it at a 2.3-to-1? That's the question. Now, if you had put this order in and you had a trailing stop loss, you have banked in 1.27. You'd have banked in 1.27. And you'd be stopped out of that trade right there. Right there, trailing stop loss. And trading stop losses work really well for reversal patterns. So once they go over a 1%, you're guaranteed that you're banking in. So it moves 1%, at least 1% behind. So it went up 2.27, so which means then you have taken 1.27 profit out of it, which is really good. And I do like those for those reversals. I do like it for the trading stop losses. I do like it for the likes of these. Why? Because reversals are quick, in and out money. you're not looking for the overall momentum. So anyone that took that trade, well done. And now it looks like this is the beginning of a new phase to the downside. Could we jump in and out on a 4 hour? Nope, not at all. Not at all. Let me have a quick look at silver. Could we jump in at silver on the 4 hour? Well, silver looks a little bit better on the 4 hour. We actually have some sort of cyclicity. If it comes back to there, then you would look for that to come down to there. That's what we're looking on the 4 hour. We have a pretty decent level there. So we want it to come down, retest, and then go again. That's what we'd be looking for on the 4 hour on silver. And then on gold, on the 4 hour, there's nothing happening at the minute on the 4 hour on gold. So well done, anyone who took that trade. Dollar index. I'm surprised the dollar index. Gold suggests that the dollar is dropping. Okay, same with silver. It suggests that it suggests that the dollar index is getting stronger. So that's what gold and silver is telling here. It's telling me that dollar is stronger today over the last 2 days. And when I look at the dollar index, it's had 2 days of movement going nowhere. It stopped. Now maybe the market's looking at it and going, well, if it's not dropping, that's good for us, which is price quite surprising. I would have expected to see 2 sort of green bars going up here. So dollar index, there's absolutely nothing we can do here. Am I looking to place a trade there? Absolutely not. Under no circumstances am I looking to take that trade. Absolutely not. Not for me. Do not take it. This is not a trade this is not a high probability trade at all. Even at this particular point, it's not a high probability trade. There's probably more probability of it coming down to there and bouncing off that double bottom. But again, let's see what happens. I'm going to remove that because it's not something I would even leave there. Everyone, it's been an absolute pleasure. If you want to learn how to trade, jump onto my website. If you want to jump onto these webinars that I do every Sunday and every Wednesday, feel free to jump onto my website. There is a free month. This is a subscription. It's 47 quid a month. And the first month is completely free if anyone wants to jump in on it. But look, it's been an absolute pleasure. Thank you very much. Hope you have a lovely evening or a lovely day, and I will speak to you all next Tuesday. Bye-bye.